please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the bell rang. That's auspicious as I wish you a happy 2018, and it's a very happy start. About 0.5% higher on the Nifty. 50 points is what we have to take it as the first tick. 10,480 to 84 is where the market opened. Sensex opened 33,935 thereabouts. That's 125 up, over 1/3% higher. The mid caps are now shoulder to shoulder with the Nifty. The Bank Nifty is only a tad lower. It's still a decent start for the Nifty Bank as well. It is those who are benefiting from the higher oil prices who are leading the rally. So ONGC is up 1.8%. Okay, after that it's just about a motley group. M&M, well, the market doesn't think the numbers are flat at all. That stock is up 1.5%. Dr. Reddy's, anyway, there was positive news on Dr. Reddy's. 1.4 up. Cipla, Sun Pharma. So it's very much a pharma, big pharma day. All the pharma stocks in the Nifty are up about 1%. GAIL again, one of the beneficiaries perhaps of higher oil and gas prices. That one is also rising. Commodity guys, Tata Steel is rising. Coal India reported better dispatches and output, and that's up about 0.8%. The rupee strengthening, worrying me but not worrying the tech stocks. TCS, HCL Tech still up. I would have thought Infosys would lead the pack with Salil Parekh taking over today. But yeah, okay, at the moment even that one is up 0.8%. Actually, the market on the whole has only two losers, and even that's not a loss really. SBI and Eicher are somewhat flattish. And maybe Indiabulls Housing is losing a little bit of what it gained yesterday. But really, 46 out of 50 in the green. Good start for the markets.
Oh, fabulous start for the mid-caps as well. At 0.5% higher, the market breadth is at almost 6:1 in favor of the advances. But the texture of the stocks that are rallying, the quality of stocks that are rallying, that perhaps could be questionable, because you have a lot of these penny stocks that are moving up higher. Castex Technology, Unitech, IVR, CL Infra, all of them, Alok Industries, anything that has debt associated with it is up almost about 5 to 10%. So you want to be a bit watchful there. DB Realty is moving up higher as well, up almost 10%. By the way, stocks in the news, Thermax has hit a new 52-week high on the back of that fresh order that it has won. TVS Motors doing very well at the moment, almost 2.5% higher after a good set of numbers that the company reported in the month of December. And as a pocket, sugar is doing very well. EID Parry has hit a new high today, so 52-week high there. Bajaj Hindustan is up 7% and good volume action on Bajaj Hindustan. And once again, ADAG stocks, all your Rail Power, etc., all doing very well, up about 6-7 odd%. So good opening, Anuj, as the Asian markets and the SGX was
good opening. And as we discussed yesterday, was more of a basket selling by one or two investors. But for me, the stock of the morning really is TVS Motor, because it's done that many times. Has been the first one to go and hit new all-time high, and I think this number is really scorching that they have delivered, and I think the market is now betting on, if the premium bikes are delivering this kind of growth, then what could the margin picture be for TVS Motor? So that, I think, for me is the stock of the moment. But will be interesting to see if we can hold on, go back to yesterday's high and start trading above that. Ashwani, your thoughts on market opening? 53 points higher now on the Nifty and about 100 points higher on the Bank Nifty.
Well, good point to go short if you are negative, because that's what you want. Get me past 10,550 and I'll buy all you are saying. But till then, it's a negative. RCom is a good short. It's started lower, probably will come off further. But people should not mistake it as a reversal of yesterday's decline.
Okay, and in terms of individual stocks, Ashwini, you said RCom is a short, but anything else?
See, basically all the high flyers, RCom, Idea, even some of the larger stocks like, say, JSW Steel, all of these guys, SBI started lower. So everywhere, where the gains are large, you can get short on right now.
Okay. Would you go long on TVS or stocks like that?
See, the market will very soon show you similar sort of pressure like yesterday.
Okay.
So I don't think being in long positions is a good idea.
Okay. Udayan, come in on this, because, generally when you see a lot of these penny stocks or debt-ridden stocks rally, it's a sign of perhaps closer to the end of an uptrend in the market. What do you do at a time like this?
I agree with you, Sonia, but you know, we've seen throughout 2017 that there have been phases where these penny stocks and small caps have done very well, and they're not necessarily heralded the start of a major correction or a top in the market. So I think this time the force of domestic money has been so intense that we've actually been able to ride out these periods of seeming froth. So we'll have to see if 2018 is beginning on a different note. It is generally a worrying sign, but the important thing would be what the DII figures turn out to be over the next few weeks. If they continue to be very strong, you might get another shallow correction on top of long-term capital gains and the fiscal deficit, etc. But it may not be that major correction. You know, 3-4% after a 30% plus rally in the market cannot be called a correction. That's just a wrinkle. So if we get another wrinkle, it's fine. What I was describing to you earlier is more than a wrinkle. Is probably a little bit more of a scare, which we haven't seen in 2017. So that is the possibility which lurks in the market right now for some reasons, and whether this small cap action is the beginning of that time will tell. But January can be a slightly tricky month for the market, given that December was so good.
Yeah, I think Bajaj Auto numbers
30%. But you know, before that, the TVS motor stock has hit all-time high. So I think the comparisons now would be with that becomes a bit of a base for all of these two-wheeler companies.
Wasn't the expectation 36%?
Yes, the expectation actually was 36.6%. So 3.08 lakhs was the expectation. I think it's come in slightly below what the street was estimating. Let's just wait by for the final number because I don't see that. Okay, I'm just opening the press release, so give me a second. 2.92 lakhs is what they've reported, while 3.08 lakhs was the expectation. So it's slightly lower than street expectations. But I'll tell you what, the domestic and export growth percentages are good. Domestic growth is 25% at 1.49 lakhs and export growth is 35% at about 1.43 lakhs. And we should actually get the trend up for you because exports for the last many months has been holding at 1.4 lakhs, which is a good sign considering that many of the export markets were going through, you know, a deep correction. But now it seems like stability has returned in the export market, and I think that's something that the street likes.
Okay, let's do one thing. Let's thank our technical experts on that. Before that,
just a word from Sudarshan.
Okay, yeah, Sudarshan and Mitesh. So, Sudarshan, your thoughts on market opening and any individual stock looks good to you?
Well, I think a short position in the Nifty is now justified. So traders can either go short in the futures or buy Nifty puts for the next few days. Your stops are wide at this time, 10,600, but it's worth taking that trade and waiting it out.
Okay.
Bata India and Ajanta Pharma are intraday buying opportunities, only intraday.
Okay, Mitesh, your thoughts?
Yeah, Anuj, the bank Nifty asset, I think, you know, is the key worry, and it's immediately started to possibly get into negative. I think I would still be shorting the banks or the bank Nifty. Two stocks one which I have a positive bias and one negative bias. Jacob, disclaimer that I personally hold the stock. I think has opened with a gap up and I think should see some momentum over the next few days. So that's a buy with a stop at 195, look for 230 as your next target. And Eicher Motors, I think, you know, after the numbers, it's kind of breaking down on the intraday charts, so we'll be selling there.
And Ashwini, your big call for the day would be to look for shorts in Bank Nifty. I'm assuming you would have already done that.
We have added 2 short positions in the Bank Nifty because it's hardly now up 50 points. And I think today will be a bad day by the time we close.
Okay, not sounding good. Sudarshan, Mitesh and Ashwini, thank you very much for joining us. We will, of course, touch base with you around 10 a.m. Then do stay on because we have another important guest joining us in the studio. Nilesh Shah, Managing Director and CEO of Envision Capital, is with us in the studio. Well, let me get away from all this. Nilesh, first of all, a very happy 2018 to you. Change of guard at Infosys today. Salil Parekh takes over. Is that making you look at the stock with fresh eyes, or have you already done that and added to your positions?
Wishing you all a very happy and a prosperous 2018, Latha. I think this time around one needs to be a little more careful with the change of guard, because I think 3 years back all of us got very, in a way, positive and optimistic, or to some extent exuberant, when there was a change of guard. This time around, I think clearly one will have to be a little more careful, in a way listen and hear out the new CEO, what in terms of his strategy is going to be. And obviously he doesn't come in from a products background. He comes in again from a services background and managing the kind of the old business. So in a way, will he be able to transform Infosys to be able to, position itself well to capture on the new opportunities in technology? So I clearly think that one will have to wait, see what the strategy is, probably see him deliver for 2 or 3 quarters, and then really take that big leap of faith.
Well, a final question to Udayan, since Awaz is asking for him. Udayan, your take, change of guard at Infosys, and it's coming at a time when there is a bit of a tailwind for the IT sector. After a lot of neglect, the sector is finding buyers.
I know, because Latha, I think that tailwind that you refer to has not been because of great performances demonstrated so far, but expectations that valuations might have bottomed out for the sector. We need to keep a watch on the currency as well out here. And as Nilesh was pointing out, I don't think we should set such a lot of store by one person taking over. In any case, if he does manage to deliver, it will take a lot of time. It cannot be in 1 quarter or 2 quarters. We've done this thing with, at the change of guard in Wipro, people got excited and saying this is a seminal change in Wipro. I remember being there when that discussion was happening, and you can take a look at the Wipro stock and how it's done since. So, there's many a slip between the cup and the lip now. So, and the Infosys stock is no longer at 925, it's at 1040. A lot of the news is priced in. Buyback is done. I think now the heavy lifting has to happen. The honeymoon period is probably over and in the price.
All right. Well then, thanks a lot for your time today. Of course, we'll talk again as we move on in 2018. Nilesh, good morning. And once again, a happy new year. Thoughts on auto space, Nilesh, because that's really been remarkable the way some of the market clearly has made 2 set of stocks, the ones which are leaders like Maruti, TVS, Eicher, and the others. Both have rallied, but clearly there's a bit of a huge valuation mismatch now between these companies.
Yeah, but I think, Anuj, clearly autos is going to be a very, very strong proxy for India growth. No matter, we could kind of debate and argue about valuations. But clearly this is one sector where, some of the leaders have been able to consistently demonstrate double-digit volume growth. And I think that's phenomenal. When you have an economy growing at about 6%, and you have some of these auto companies growing at 10–15% in volume terms, I think that's remarkable. Okay. And it's something which I think should persist for a very long time. It's not a growth opportunity which we're going to see just for a few quarters and it kind of tapers away. I think this is an opportunity which is going to last for many, many years. And to that extent, yes, the valuations could look a bit heady in terms of the near term, but clearly believe that from a medium to long-term perspective, it represents one of the best growth stories in India.
In fact, I just want to mention, Bajaj Auto is actually surging because the 3-wheeler sales have been exceptionally good this time around. Actually, higher number of permits have also opened up, so that's helping 3-wheeler sales. In the press release, they say that this is the highest ever 3-wheeler sales that they've reported, a 187% growth, coming in at 63,785. So that's the reason why Bajaj Auto, if you look at the chart, there's a sudden spike that you've seen. Very good numbers coming in. And just to tie in with that point, Nilesh, you spoke about autos, but in auto anks, you have so many of these companies that supply to these 2-wheeler makers, some of the bigger companies as well. Anything there that still catches your fancy?
Oh yeah, absolutely. I mean, we own a stock called FIAM Industries, and that's a company which provides lighting solutions to the 2-wheeler players. So they kind of supply big time to people like Honda and TVS Motors. And if you really look at Honda, while of course the Activa and all of that is doing extremely well in India itself, but Honda itself is looking at significantly making India an outsourcing base. Internally, Honda seems to have cleared that threshold before they basically identify a particular country as a manufacturing base. And it's clearly crossed that. So what you could see over the next 5–10 years is Honda itself turning out to be a huge exporter. So the way we saw in cars, where Hyundai and Maruti both have become, in a way, outsourcing bases, India's become an outsourcing base, we think Honda will do something similar in the 2-wheeler space. And therefore, a lot of auto ancillaries which supply to these kind of companies, I think, should be carefully watched for. Yes, again, valuations may not be kind of that single-digit or double-digit kind of valuations, but nevertheless, I think the growth opportunity is significant there. Okay.
Well, since you say, when Anuj asked you about automobiles, you began by saying this is the best proxy of the consumption story. what more will you put in that discretionary consumption basket? Airlines, jewelry, consumer durables like, you know, Hitachi, Symphony, what all come in that short category?
Yeah, I think the consumer durable space has got, you know, a lot more expensive. I think 2017 was incredible for them from a valuation point of view. It's one of the best performing sectors. So one should be a bit careful right now. But two opportunities which look extremely attractive in the consumer space. One is, of course, this whole travel and hospitality space. And outside of airlines, but you should really look at some of these companies which are into the holiday side, the forex side. I think that's a space which is extremely good. Core hospitality, companies which run resorts. I think that's a very, very exciting space. The growth opportunity is phenomenal out there. So that's one. And two is, I think, on the consumer side, again, food as a business, I think, is a fantastic opportunity. I think that's one space where the unorganized sector still rules. And you are going to see over the next 5, 10, 15 years, this whole shift from unorganized to organized. So food, I think, again, represents a very, very good and a strong opportunity.
Oh, yes, some of these stocks have done well. By the way, there's another theme. Yes, another theme which is emerging today. Aisha, by the way, is the top loser right now. HPCL and BPCL. Now, Nilesh, you know, yesterday I asked this question to Samir as well. Petrol and diesel prices clearly have not been tinkered with for last 1 month or so. There's no marketing margin which is visible on the website. Now we believe even for cooking gas, that monthly price hike has been done away with. Is this risk back on table for not just for oil marketing companies, but for this entire story, you know, on the oil and gas pack?
Well, surely for the OMCs, I think one should be out of this space for the next year or two. One has to be completely out of this space because that's the most vulnerable segment. I mean, this is clearly one area where I'd be very surprised if the government goes ahead and, you know, does the price hikes and things of that kind. So I clearly believe that the best is already there for them. Whatever good could have happened for them has already happened. What you would basically now see is just their overall business growing in line with the demand for petrol, diesel, which would probably be the mid-single digits, and that's not really a great growth rate to achieve, and therefore one should clearly be out of this sector for the next year and a half.
Yeah, I remember someone said the reforms will be tested when, you know, crude goes to 70, 75, not at 50, 55.
Absolutely.
Nilesh, wanted to ask you about the budget and your expectation this time, because everyone once again has started to worry about the possibility of long-term capital gains. Would you be worried as well? And what else would you expect?
Well, first, I hope there is no taxation on long-term capital gains. I don't think it's something which is very material, and therefore I don't think the government should really kind of, you know, fall for it and tax long-term capital gains, no matter how you argue about it and whether long-term capital gains should be exempted and things of that kind. But I don't think this is the right time to do it. It's surely not one of the most important decisions the government should indulge in. So that's clearly one. Two is, I think there have been concerns on fiscal deficit, but our own view is that you're not going to see some major slippage in fiscal deficit. There could be a bit of a spike out there, but it's not something which is going to kind of go towards that 4% mark and all of that. And that's because it's quite possible the next financial year you would see a lot of the divestments happening through the transfer of shares. You know, so the HPCL transfer happening to ONGC or potentially many other such transfers happening, which will cushion the fiscal deficit to a great extent. So yes, obviously the best is behind us in terms of the fiscal deficit and fiscal consolidation, but it's not going to be worsened like what the situation was 4 or 5 years back. I don't think we're going to get to that kind of a situation.
Okay. Well, I have very strong views on long-term capital gains. Not that they should be material to any viewer, but I do believe those who make money should pay taxes. But in any case, that's another point. Coming to the stock selection itself, where are you on IT generally? I mean, you did say that you would want to watch the Infosys new boss's performance, but mid-cap IT is doing well, as Dan said. Yes. Valuations is a good argument. Is there stock picking over there?
I think so, because clearly if you look at the frontline IT, I'd be surprised if the earnings growth gets into double digits. It will at best remain single digit, unless of course there's a strong tailwind of the currency. So unless we see the currency going towards 65, 66, 67, clearly the earnings for the top tier IT companies will probably remain in single digit, and that's probably a function of their size.
Yes.
But the mid-cap IT are much, much smaller in size. They are probably a 10th or a 15th of the size of any of these big guys. And therefore, their ability to grow at a faster pace, and maybe even in terms of double digit, I think is much higher versus the top tier companies. And I think there's some amount of under ownership as well in the mid-tier IT space. There are lots of companies where there has really been no increase in ownership by institutional investors over the last year or two. And I clearly believe that that's a much, much better space to be in versus the top tier IT companies.
Okay. Well, just that hypothetical question we were discussing with Udayan as well. If at all there is a long-term capital gains tax that comes in, I'm sure it'll be a nominal one even if it comes, will the market just digest that and go on? I mean, of course, there'll be a reaction immediately, but there is still a growth story, isn't there?
Oh, absolutely. But I think it's going to be the nature. I mean, the devil is always going to be in the detail, in the sense what kind of taxation comes in. Is it just going to be a normal tax out there, or is it going to be that the period which you defines as long term goes up from 1 year to 2 years or 3 years? Is it on prospective investments, or is it also on your past investments? Obviously, the third one, of course, is in a way a doomsday scenario from a market's point of view. But I think if it's the first two, I think if it's just an extension from 1 year to 3 years where, equities is put on par with other asset classes in terms of the time frame, then I think that's something which market will easily absorb or digest.
All right, Nilesh, we leave it at that. Thank you so much. I hope you have a great year, and once again, wishes to you, your family and your entire team. Thanks so much for joining us.
And do keep dropping in 2018 as often as you can.
Okay, well, Bajaj Auto is the stock that's on our radar right now. The auto sales for December have come in. It's a 30% growth overall. Exports are up 35% and domestic sales are up almost 25%. S. Ravi Kumar, the President Business Development at Bajaj Auto, now joins us on the phone line. Mr. Ravi Kumar, good morning. Once again, your three-wheeler sales have done very well this time. It's the highest ever at 63,800 almost. What's the trend looking like in terms of three-wheeler orders, and is this a run rate that you can sustain in the months to come?
Morning, Sonia, and very happy 2018 to all of you.
Happy New Year to you.
Yeah, and as you said, this quarter has been really great for the three-wheelers, both domestic and exports. We have done almost about 180% growth in domestic and 200% growth in exports. And going forwards, like you said, this type of growth rate will sustain at least for the next 4-5 months, we hope, because as you know, the Maharashtra permits will sustain it for some more months, and the export numbers are much more steadier, and the markets are doing well. The initiatives on three-wheelers in various new markets and exports have started really kicking in well, very nicely. So I think three-wheelers will sustain at these levels for the near term.
So by the end of the fiscal, how much could you do in terms of three-wheeler sales, both export and domestic?
You can take, I think, you can take for Q4 a similar number for Q3 and go ahead.
Okay. Well, good morning, Mr. Ravi Kumar, and a great 2018 to you and everyone at Bajaj Auto.
Thank you very much.
Well, the difficult number to digest is this 2.92 lakh overall sales. I mean, look at the trend you have set up. July 3.07 lakh, August 3.35 lakh, September 4.23 lakh, October 3.82 lakh, November 3.26 lakh. It's a little difficult to swallow 2.92. I know that people don't buy too much in December. You wait for the next year so that you're not saddled with an old bike during resale. But even then, 2.92 is lower than what people were estimating.
Yeah, that's right. That I would actually concede to, but the fact is that the domestic two-wheeler is the piece which we should concentrate on, because exports have done well. If you see in almost about 116,000 units of two-wheelers there, which is 20% growth. That is a very nice number sitting there. The domestic, which is there at almost 113,000, I should inform you that, and the viewers, that the retail has been quite good at about 125,000, much better than what the wholesale has been reported. We didn't want to have the 2017 overhang going into 2018, but that is a very, very small story. More important is that if you see the product actions which have panned out so far, the City, Platina, and the Pulsars are continuing to hold on to their forte, and they are not eating into each other. They are adding clear volumes in their specific segments. The positioning has been absolutely spot on. Now, to go into this particular quarter, Q4 of this year, we have already started production both in our plants, Waluj plant as well as the Chakan plant, as well as the Pantnagar plant. The new discovered twins, hunting in pairs has always been good for us, and so we are going to unleash 2 discovers into the market. Production has already started in December. These 2 discovers are going to be very nicely positioned, both in terms of price, in terms of the feature content, in terms of performance.
Are these the new launches that you spoke about that would happen in January?
Yes, yes. Okay. And and because of the content as well as the price positioning of this product, we are quite sure that they are not going to cannibalize any of our models. We are going to hit into the belly of the market, and in addition to this, so these discovers this quarter will have the full quarter benefit of this nice addition. And going forward, some more product action is going to be in place even in this quarter itself. So all in all, based on pure product actions and the positioning that we'll be creating, we are quite confident that we will deliver the type of numbers in domestic that we sort of alluded to in the past.
Just 1 second, sir. I just need to focus on the markets because the market is at the low point of trade right now. There's a sudden slide that we've seen in the last 5-10 minutes, and some of these leverage stocks are coming under pressure.
The mid-cap index is down 110 points, Sonia. That's down about 0.5%. And today, that it works both ways, right? On the way up, all these mid-caps look good, but on the way down, I mean, Reliance Power is down 10.5% from the high point. Just pull out some of these stocks. Infibeam is down about 5% from the high point. Reliance Naval is down 8% from high point. JP Associates is down 7% from high point. So I think clearly that clearing out process is on, which started yesterday. The warning sign was there yesterday that, maybe don't overstay your welcome in some of these mid-caps. And today, I think, may well clean out today and tomorrow, but clearly there's a lot of
by no standards could you apply the Reliance Communication argument to the other Reliance stocks. And power is a sector where we are still looking for buyers. And in Rel Power and several other power cases, you're also looking for raw material in the form of gas, which if anything may become expensive. So this argument was just not washing. Why should all the power stocks do so well? I mean, just because one of them got a financial closure, this can hardly be justified or generalized. So yes, that correction had to come, and now 0.5% down. Sensex and Nifty flat. I
just want to get back to Mr. Ravi Kumar. Sorry to interrupt you, sir, because the market was falling. But just two-part question. Are you on track to do that 4 million unit of sales by the end of this fiscal that you had targeted earlier? And are you on track to achieve that 23% domestic market share guidance?
See, we have, for example, the total number so far is 2.96 million. So we have only about million plus to cover. I think we are quite on track there to deliver this 4 million for the full year. And in fact, I should say going forwards, exports are looking quite okay for the Jan-March quarter. I think it should be 145 plus minus. And I'll not be surprised if it is close to 150. But as I told you, three-wheelers quite on home, and domestic two-wheelers fall in place, and so those numbers are pretty much in place.
So we can take a 1.45 to 1.5 per month for exports, you're saying?
I would say, yeah.
Okay. All right, Mr. Ravi Kumar, thank you very much for joining us and for that optimism over the Jan-Feb-March quarter as well. Thank you for joining us today. Once again, the mid-cap index did show that huge 100-point cut, but at the moment is finding its feet, both the big boys and the mid-caps.
This point down. In fact, do we have Ashwini still with us? I just want his comment.
Got Ashwin, it right. You must say both are technical.
Yes, Ashwini, you were referring to this. You shorted, you said in the first trade, and then you added onto it when it showed first signs of weakness. But what next? Are you staying with shorts, or are you booking there?
There is no risk in equity investing. That's ringing in my ears since yesterday. So now we'll find out. See, everybody is long. The markets are not able to make headway. this is bound to happen. This momentum will increase. All of these, two-digit stocks, Reliance Communication, Reliance Power, etc., they'll fall, 3 times as fast, because you can see today you have good global cues. Everybody is back. Still, the same story continues. So definitely there are people, strong hands, which are booking profits, and this is the time to stand aside, because this sort of train, once it starts to come at you, all sorts of stops and all sorts of long positions need to be cut. So given the futures positions, etc., I think more downside should happen.
Okay. Stock-wise, are there any shorting candidates now?
See, all these guys who ran up, 50, 100%, like Reliance Communication, Reliance Power, everywhere you can go short, because that's where long positions are likely to be trapped. Even GMR Infra, the 3 calls that I have right now are RCOM, sell with a stop of 35, target of 32.50. GMR Infra, which is a sell with a stop of 23, target of 17.5. And R Power is a sell with a stop of 61, target of 53.
What about the HP-BP twins?
See, again, I've been saying that the best of these stocks is behind. So may not be a large fall, but definitely going towards the 200-day moving average. I think till 75, they could be in a 10% range, but bigger falls may start post $75.
Okay, Ashwini, thanks for that. The mid-cap index is cracking quite a bit, so almost a 0.5% fall now. And so very quickly from 1,200 stocks on the advancing side, we've now moved to 1,200 stocks on the declining side.